Morning. How's the mood at the desk? Are you recommending your big HNI clients to start booking some profits, or are they eager to deploy more because they missed out on this mega mammoth fall to deploy? How's the scene there?
Hi, good morning. So I think the mood is very positive. I think obviously, as you rightly said, a lot of people missed out last Tuesday when we saw the sell-off in the markets, and obviously, so I think luckily most of them guys are still holding on it, their positions and not sold it, and we're just riding it. So obviously, a few things which I can just discuss on it is one is obviously PSU banks. I think they've garnered a huge positions. What we also see, and as a house also, we feel that I think PSU banks will outperform the private banks, and I think in financial space, a lot of room for PSU banks. This quarter numbers were pretty strong versus the private banks. So I think PSU still remains the top bets in the financial space, and I think that's what the mood also among from the desk as well.
Okay, but we've been talking a little bit as well about a comeback of private sector banks. Is that something that you would look at selectively as well?
So selectively, the beta would be more into the PSU banks from here. But in case of private sector banks, where as we are seeing, there's a broad-based rally in the markets. We've seen the FI's participation back into the markets in last few days, what we've seen. So I feel that I think whenever they return, I think it's more of a private sector banks first, and then the PSU banks. So I think private sector banks this quarter numbers were also decent. So I think in that space, ICICI Bank remains the top bet from our end, and I think that could be followed by Axis Bank post ICICI. So this two remains the top bets on the private sector banks, and as I said, that I think beta could be more in PSU rather than privates.
Okay, that's the view coming in terms of the pecking order for the banks. Rahul, we'd seen that liquor trade as well sort of play out. Is it, sort of miss the bus when it comes to looking at some of these stocks, or is there still an opportunity?
So I think if you look at it, I think it's more of an entire consumption basket. If you look at it, I think those stocks have not done well in last 2 years or so, and we've seen this momentum in last 10, 12 sessions that I think most of the stocks are up 10 to 15% depending upon it, from FMCG to consumers, or we call it the whole basket as well. So my view is I think it will continue. We have not missed out. I think most of the commentary, if we hear from the fourth quarter results, one thing is visible, there's a volume recovery in most of the cases. And seeing the government coming it up, so I think there could be more stands, what the street estimates, it could be more of a popular stand and a good monsoon, which the SkyMet is recommending. So I think this is the direct impact on this FMCG and the consumer as a play. So my sense is I think we have not missed out. I think one should still select FMCG names plus the liquor names. One should consider having in his portfolio.
What are your thoughts on the approaching Ola Electric IPO and the way in the run-up to that, a lot of legacy two-wheeler companies have already made some 40-50% kind of up move. Would you be looking at Ola Electric for your clients, or better to play an embedded play in some of the existing two-wheeler companies?
So I think most important thing, I think I would stick to the old plays like I think Bajaj and Hero and iShares of the world. I think they have done quite well in last 6 months. If you look at it, average 25 to 30% in most of them. And I still feel there's a lot of room and in that space. And as we are seeing that the entire wage growth scenario is improving and the activity in the overall economic growth. So my sense is there's lots to be made on this two-wheeler space. So I would stick to the old stocks, and obviously we'll consider at the time of IPO about Ola as well.
Rahul, where within cement are you scouting for opportunities, or would you say it's still a good time to perhaps add on to the current positions?
So I think I feel that I think still banks, I think PSU banks, as I mentioned, that's one space. Then I think even in the case of select housing finance companies, I think we've seen the real estate as the best of the year, last 2 years what you've seen, and I think most of them have guided for 20 to 25% growth, and it's not one but across the board. So I think now to play on terms of the policy, real estate play would be the best, would be the housing finance companies. So I think and still they are available at decent valuation. So I think the risk versus reward again would be very favorable in the housing finance companies, starting from PNB Housing, which is our top idea, and followed by maybe Rapco and maybe Chola and so on and on.
Sure. Rahul, though my question was on cement, wanted to know where is it within cement are you finding opportunities, if at all? Because suddenly we're seeing that buoyancy as well kick in the stocks.
So I think in cement space as well, if we look at it, I think last 3-4 session on rumors of that could be a price hike, and we've seen cement stocks moving upwards. So I think obviously I would still prefer the large cap names, and to play again to participate in the large cap names. I would play again a costly by playing like an Ultratech. I would buy Ultratech still at this levels, and we're seeing the infrastructure activity to remain continuing in the Modi 3 government as well. So we will see a decent action in the cement stocks as well. So Ultratech remains the top bets. We could see another 15-20% from here. I would the best way to play Ultratech is to buy Grasim. I think the holding company that would be more upside into it. So trading at still at a discount to what the overall value is. And second, obviously, in a mid-cap space, something like JK Lakshmi looks interesting in a cement.
So has an increasingly, active paints play now. Obviously, after the guidance from the management that 10,000 crore revenue is possible in the next 3 years in a profitable manner is something to watch out for in Grasim. But Vaishali, I want to talk to you about a stock which shot up in last hour trade yesterday very sharply, Dredging Corp. This is one PSU which is not very often discussed, but yesterday they got a big order from one of the ports, almost 70% of their market cap, a 3,000 crore order, and the stock is almost 2,000-3,000 crore or thereabout. Can you do a chart check for us on dredging?
Definitely. So this stock we have been tracking since a very long time, and now yesterday what we saw, it has also given a weekly breakout. So I think, and the indicators show no sign of fatigue. So I think continue holding. In fact, buying opportunity is not now, but one can start accumulating because we still have a good strong support at 850 levels. So if one needs to buy, 850 should act as a good support. And I think the way we are looking at the weekly and the monthly chart, it's ready for a target of 1,200 to 1,300 from here.
Right, okay. Those are some of the buzzing stocks in trade and some of the big spurts that came in. Naresh, we've often addressed Interglobe Aviation. Yesterday, of course, the stock came off after the promoter stake sale in that block deal. But Indigo around 43.76, still a buy, given that stock is pretty much around the all-time highs?
So if you look at Indigo, we've seen multiple deals over the last 1 year. And once it starts sustaining above the deal prices for a week, that tells you that the deal has been adjusted and absorbed by the markets. The trend is still up. The last bottom for the stock is 4,050 odd level. So that would be a stop loss. So closer to 4,200 is where you want to buy, or you want to buy it above 4,600 where it gets into fresh momentum. The only problem is the stock has done really well over the last 1 year, say, and also from the last deals as well. So the last deal happened at 3,000 odd levels. The stock is already up 40% from those. So out here, trend is up, but one would be better off waiting out for some time. And once it settles down closer to 4,200, that's the time you want to buy.
Meantime, let's get a sense as well as to what the outlook is, Rahul, when it comes to some of those FMCG counters. Done and dusted, or still select opportunity for the long haul?
So I think after a long time, we've seen that FMCG stocks back into action. And I think if you look at last 5 year PE compression or maybe the valuation, if I look at it, it's still trading cheaper in the last 5 years PE average of most of the FMCG companies. And way the fourth quarter numbers have been, and I think most of the managements have guided that there will be a good volume growth coming up in this fiscal year. So my sense is, I think post this election results, I think we saw most of the consumer names back into the focus, and obviously, as I said, that SkyMet recommending a good monsoon this year as well, so which will also augur well. And I think overall, if we look at it, I think macro plus micro in the overall country as a whole is very, very stable. So my sense is, I think obviously most of the names are expensive, but I think after a long time we will see a re-rating happening in this consumer names. So followed by the Dabur being a top pick from our side, followed by Colgate and so on and on.
Been looking at some of these NBFC names, which are very active. Even small finance, Jana Small Finance have been doing very well. Or even Poonawalla, especially after this 76 lakh block deal happened, the former MD sold off. The new guy, Arvind Kapil, is taking off yesterday itself, it's coinciding though. Or any other?
So I think Poonawalla, as you mentioned, it obviously is one of our top bets also in a NBFC space. So I think still a lot of value versus the growth. So I think both augurs very well for Poonawalla, and I sense a lot of room from here as well in Poonawalla. From here, so we expect another 20-25% upside in Poonawalla from current levels as well. And second, I think, as I mentioned earlier, we are focused more on the NBFCs, focusing on housing finance. So I think HFCs will benefit more, and I think in a full-fledged NBFC other, I think Chola is what we've been liking.
Right. Okay, HCL Technologies, that's going to be another stock which is going to be in focus this morning. We were just chatting with Sanjeev Bhasin as well about it. They've signed a deal worth about $278 million. Just bring up what the IT pack has done in just the last 1 month, and especially in the last 1 week. If we can just bring up the Nifty IT index, perhaps that's going to give us a better color. In the last 1 month, it's seen an uptick of about 4.5%. Of course, it did go through that bit of chop and churn with the rest of the market. In the last 7 days, it's been more resilient, about a 6.25% of a move coming in. Rahul, any thoughts from within the IT pack? Do you think it's now time perhaps to start nibbling into the sector?
So if I look at it, I think last quarter numbers were bad for most of the IT companies, and I think I would still wait. And there's a lot of other opportunities in the markets versus IT companies. So I would still wait. Just because the valuations are compelling, I think one should not get it. But I think there are other serious pockets where the money will be made versus the IT pack.
Okay, fair enough. That's the view coming in on the entire IT basket. Meantime, just awaiting the pre-open rates and going by what the rest of the globe has thrown up, it could perhaps just be a quietish start for our own markets. But commendable, Rahul, the way the broader markets have shaped up, the kind of recovery that we've witnessed from last week, now already perched at all-time highs, not too different when it comes to the frontliners as well. But do you believe that this momentum is here to stay within the mid and the small caps?
So I think when we see the broader markets performing, obviously I think the mid caps will follow soon for it. So I think we had a fantastic year in the mid caps, and I think in a lot of mid cap stocks, I think we've seen a recent correction as well, and still they have not performed the way the markets have been. So I still think that I think mid caps will still rally, and whenever we see the large inflows coming up from the domestic side, it's firstly predominantly it's some mid caps, and then obviously the large cap follows. So I would continue to believe that I think mid caps will continue to well, but yes, there will be select pockets and there will be more of a stock specific. There are a lot of few stocks where we have seen that insane valuation, but just because the markets are moving up, they are just following the ride. But there, I think there will be a breather for them. But there's a lot of room still for the mid caps to continue to do well.
Bunch of other names, and like we were just flagging off, UBS has named CG Power, HAL and ABB as one of their as three of their top picks, and in that pecking order as well. They're very bullish on industrials. They're saying that the theme is here to stay: defense manufacturing, electrification, mobility, industrial efficiency. They find all of this to be the space going forward to bet on. So, Naresh, just wanted your thoughts on CG Power, HAL and ABB, these three charts.
So these are stocks now which have become tough to trade, as well as for investors how long to ride it. So if you look at CG Power, it's gone, it's been one of the biggest regrets for people, those who don't own it, from almost a single digit stock to 660 rupees. But the trend has never faltered all through. So we've not seen more than a 20% correction or sustain on CG Power. So out here, the only way you can hold on is to continue to ride. Same is the case with ABB India. Ever since it has taken off in 2022, the trend has continued. So out here, the problem is at current levels, you cannot open up a fresh trade. And if you have it also, you're always on the touch line, whether you want to reduce or cut out positions. So my view is at this price points, after such a rally, one is better off just keeping a trailing stop loss or trimming slowly and steadily over a period of next 6 months.
Okay. Meantime, Rahul, just wanted to get in a take from you as well as to what the potential Ola IPO could do when it comes to the overall auto space. And, are there any other new listings that you're eyeing? We were just discussing this morning, Hyundai, Ola, some of the big ones within the auto space, or anything that's recently listed that you would look at?
So I think Hyundai would looks like an interesting play. I think after Maruti, I think direct competitor is Hyundai, and I think after a long time we would see a serious auto player coming into the play and just stayed in the country for a long time. So I think that would be interesting at what valuations they hit the markets and what's the value of the investors would make. But so that is an IPO. I think one should look at it in this thing. Ola obviously will be the buzz in the street. I think one of the players which will be getting pure EV play getting listed on the market. So I think there will be a lot of buzz into it. So there also I think some allocations will be done. But obviously, as I said, this too remains for its theme. But I think in near term, I think still the old players like Bajaj and Eicher will continue to do well in the auto space.